We will call the May Finance meeting to order. Can I have a roll call, please?
Put the wrong one up. Mr. Johnson?
Present.
Mr. Legess? Mr. Washington? Mr. Vickery? Mr. Hess? Mr. Mulcahy? Mr. Scott? Mr. Seroy? Mr. Hildebrand? Mr. Einfeld? Ms. Weber? Mr. Payton? Mr. Ritter? Mr. Wheeler? Mr. Lear? We have a quorum.
All right, do we have any public comment? I did not receive any. One final call for public comment. Okay. We have no presentations today, so we will turn to the approval of minutes. The minutes have been dispersed. Can take a motion to approve the minutes. Mr. Hess, a second. Mr. Payton, all those in favor say aye. Aye. Opposed, nay. Motion carries. We will move on to item number 5, the County Auditor's Office with Mr. Lee. Can I have a motion to combine and approve the monthly claims? Mr. Mulcahy, second. Mr. Scott, and we'll do a roll call vote.
Mr. Johnson?
Aye.
Mr. Legess? Mr. Washington? Mr. Vickery? Mr. Hess? Mr. Mulcahy? Mr. Scott? Mr. Hildebrand? Mr. Seroy? Ms. Weber? Mr. Payton? Mr. Ritter? Mr. Wheeler? Motion carries.
Mr. Lee?
Thank you, Mr. Chairman. Good morning, everyone. Good to see you this morning. It's not a whole lot with the claims. There were a few issues that we saw this week that, we just want to point out. We processed quite a few, but we saw about 17 that needed various corrections made to them. About 6 had checks printed without the claim being authorized by me. 4 were rejected for various reasons. So anyway, those were corrected. 2 of them we had to pull. They weren't legitimate. So, but the other 2 were corrected and resubmitted. So as far as that goes, it's pretty straightforward. We did, as you see in the report, transfer $1 million from the highway department. So you see that cash transfer. The 250 is the IPTIP. Let's see here. We saw as well, the other thing, I know I say this all the time, is that the claims report, of course, is just cash in, cash out. And it's not necessarily related to the month's expenditures. So we're paying stuff that are months and months in the rear. So even when I provide a comparison between April last year, the year before, and prior, the timing of the TAWs, the timing of any receipts that we get, all of that stuff will fluctuate that number. So if you say, well, claims look like they're out of whack this month, they're really not. They're still being paid. So we've, as you well know, claims directly impact cash, and I'm not sure how far the finance department is in entering the claims, but I did check the general fund, and it's $5.6 million. There's a credit in that cash account, so that's an indication that we do have quite a few claims that are entered, and we got a reasonable idea of what our payables are. So that's that on the claims report. Are there any questions at all?
Yeah, just to clarify one point, credit for cash in the financial statements is not a good thing. It might be counterintuitive when we think of a credit in cash, obviously, that it means we are negative cash. So just wanted to clarify that point. Thank you.
Thank you very much, Mr. Chairman. Interestingly enough, I've had 2 meetings in the public about our finances, and I did make that very statement, and people were shocked when I showed them the trial balance of the 10122. So anyway, it's very informative when we kind of explain it in those terms. People are able to digest it better. Okay, so moving on, I'm going to probably prepare a PowerPoint for the next quarterly report just so that it's easy to digest, but I wanted to hit some of the highlights since I was unable to be here with the last quarterly report ending in February of this year. I was at the IACO conference and was able to pick up a lot of useful information for us, which definitely there'll be more to follow on that. Couple of the highlights from the quarterly report, which everyone should have received via email, where I kind of outlined some of the concerns that I have seen, a lot of the progress that we've made. Obviously, our audit is going to talk a little bit about that progress in terms of, even though the change in net position has gone down from last year, the value by which it's gone down is less than the year before, things like that. They'll talk through. So we're really excited about that stuff. One of the, a few of the general notes is, we all know this already from a financial perspective, but I just wanted to outline it in the quarterly report in that we have some serious things we need to do to make sure we have the fund balance at the end of the year we need in order to make it through our, as our chairman calls it, cash desert, which is basically from January until July. And so one of the things I indicate here is that even if we're able to build up a cash balance, in the general fund, or the 10122, I guess I should say, because we're still going to have to interfund borrow. That's not free and clear money. That money's already spoken for. The projections this year is that we may have some cash by the end of the year if revenues and expenditures stay along the same lines they're currently on. But that money's already spoken for with the $1 million we just borrowed that we'll pay Highway back here shortly. But then we owe them $3.5 million. So that's spoken for there. And then the $1 million that we're losing from the advances from the banks. So it sounds good that we're making progress, but it's all already spoken for. So I wanted to put that in there just so that everyone on the board could kind of see that information. The other thing we discovered the chairman's point is that in the 10122, there are two funds in there, one in particularly that's federal money. And we discovered that those funds need to be moved. We don't even need to reflect them in that account. And so, and there's a couple of other funds that we won't have access to in terms of interfund borrowing. And so all that money has to be taken away as to money that has to come from somewhere else. And so those are some things that, as we're looking at this from an audit perspective, we want to bring to the attention of the board and obviously this body from a policy standpoint. We'll have to watch what decisions you want to make that will impact being able to absorb those hits to cash. Few compliance things that I did outline is that we have a few things that I thought were worth mentioning. Is we're supposed to have what's called a turnover audit of any officer that's in control of county funds whenever that office is vacated. Particular concern is with elected officials, and we've had turnover, with elections and so forth across the years. As far as we can tell, we've not done one of these audits. I have been advised by our outside auditors, SKDO, that they believe the annual audit satisfies the requirements of that audit. The only issue is the statute says that in addition to any other audits required by this division, which would be the outside audit, you must perform these turnover audits, as it were. So we're working through some of that stuff and figuring out just to what extent do we need to perform those duties. But those are the kind of things that we identify, and then we just want to inform people and kind of educate them on what that is. So I'm working on getting that clarification and hopefully be able to report back to this body on what the steps forward would be. The other thing I discovered is that we're supposed to post our management letter from the outside auditors on our website, and we have not done that, as far as I can tell. And that started in 2014, and that should be done. So we'll be getting that done so that we can be in compliance. And then, as I go through some of these things as we set up our auditing schedules and all that kind of thing, we're looking at, just what is the statutory authority and responsibility of the auditor's office. And so the last thing I note is we're looking for clarification from the Attorney General on the language about the auditor being the general accountant of the county. I know some years ago we separated the offices under the guise of segregation of duties with the Yellow Book, but that is contrary to the state statutes. And so we're looking for clarification on what we have to do as far as that goes so that we're in compliance, because at the end of the day, we want to make sure we're doing the right thing. We want to make sure that we're working on behalf of the people in the right way. And finally, we're working with our outside auditors, and the chairman has been, Chairman Wheeler has been very gracious with, engaging me in the activities going on with the audit. Unfortunately, the last meeting that I knew of, I was, at the training in Springfield, but we want to make sure that the county auditor is involved in the county's audit. And so we'll be working in the future to make sure that we're intimately involved with that whole process, and then all of the things, the activities that do impact that audit. So we want to make sure that that happens, which didn't happen to the degree I had hoped this year, but it will going forward. So that's kind of the highlight as it relates to the claims and the quarterly report. The charts hopefully are very helpful to kind of digest the information. There's a lot of information there. It's almost 200 pages. I don't expect everyone to read every word, but we really are working hard to try and make sure we present professional and very informative information. So with that, Mr. Chairman, I guess I can entertain any questions there may be.
Mr. Seroy?
Thank you, Mr. Chairman. Mr. Lee, could you go back to the federal funds that you have to pull out of, and how much would that be, if you can be so kindly to explain that process of the federal funds that we have in the 101 account?
The 10122, yes.
Yeah.
So let me see here. What we're referring to are the forfeiture funds, which is basically the state's attorney's office when they collect the things that have been forfeited through drugs and so
Like
forth.
maybe the $1 million they found out at the gas station a year
Things,
or so ago?
yeah, things like that.
Okay.
So that fund is Fund 300. There's only $60,000 in there. But also, we have to remember that elected officials, and this is one thing I have mentioned in the past, is that the elected officials have been very generous and cooperative with allowing their special funds to be interfund borrowed. And we have to remember that they are participating in that regard. There are some who have said that they need that money to perform the duties of their office. And so they're placing restrictions on that, which they can, because obviously the board can't interfere with the internal operations of their office. And so we're looking at between Fund 300, 305, which are the state's attorney's funds, some of the funds out in the judicial circuit, about $363,000 that won't be available to us in terms of cash.
Okay.
So, and that has to be made up somewhere. And the chairman and I have had offline conversations about it, like, you guys have to do some work, and trust me, the chairman's putting in the hours to try and figure that out. And so I'm confident that we'll be able to do that.
Thank you, sir.
Mr. Wheeler?
Thank you, Mr. Chairman. Just in a point of clarification, federal seizure money you can't interfund borrow. That is a key, and so that's why that needs to be removed from the 10122 account. Even though we never access that money, it's part of the same kitty of money, if you will. So we can't even have the perception that may be interfunded borrowed. So
Looks bad.
Interfund borrowed. So that is one thing. Now, as far as money's not being available. Just because we interfund borrow doesn't mean that we're not able to pay the bills out of these special funds. Sometimes they're delayed, sometimes they're late, but we have to make accommodations for when, certain purchases that need to be made. So it's just it's all in this big pot of money that we're using to plug the holes as we possibly can. And later on, I'll talk a little bit about what else is being paid for out of special funds, because I had an eye-opening moment yesterday when I ran some numbers, and I'll fill you in on that when we start to talk about our overall budget. So, thank you.
Thank you. Any other questions for Mr. Lee? Mr. Vickery?
Thank you, Mr. Chairman. Good morning, Mr. Lee.
Good morning, sir.
I did not download the 191 pages. Okay. I did scan some of it. As a committee member on quarterly reports, my main interest is the trend of departments, whether they're over or under budget. So if there is some way that we can publish or put forth a report, that's my main concern. I just want to see the trends. Are we going over or under budget in different departments? And to sort through 191 pages, I was having a hard time. So an abbreviated report of that kind would be helpful to the committee, I believe. Thank you.
Excellent. To your point, Mr. Vickery, there actually is, I've got a very nice chart by department that shows, and I can send you that individual page. I can provide that to you. And it actually shows that it's year to date. And I also show the percentage change in revenue or expenditures. Some offices are just expense offices, right? My office doesn't generate any revenue. Sheriff's Department does, that type of thing. So, and I show the percentage change from the previous year. And so I can produce that very easily for you and any other members of the committee as well.
All right. Any final questions for Mr. Lee? All right. Thank you.
Thank you, sir.
We move on to the insurance and HR update from Ms. Smacken.
Good morning. Okay, let's go over the staffing report. First, starting with the circuit clerk office, they had one full-time person retire. So you can see their count changed to 34. Highway has begun hiring their seasonal summer maintenance help. They have 3 that has been hired, so their count is up to 34. And then correctional officers, there is 1 that has resigned, and then we did adjust 3 due to the status of those employees. So their count is now at 106. The sheriff medical staff, they've hired 2 full-time employees, so we are up to 17 there. State's Attorney's Office has hired 1 full-time person, bringing that to 28. Treasurer has 1 full-time person and a part-time person for the summer, which has brought their count to 7. And the VAC has hired 2 part-time drivers, bringing their count to 6. So our total staff count now is at 503, with the full-time equivalent being 448. And that's the staffing for this month.
Any questions on the staffing levels?
I do. Yeah, I just wanted to update everybody on the IPRF training. All board members should have received an email from Donna Ryan at IPRF to complete your training for our sexual harassment and diversity training. You can do that anytime from your computer. And we did decide there are a few members that are either maybe having computer trouble or would prefer to do it as watching a video here. So we will stream a video next board meeting after the board meeting on June 13th. So anyone that would like to stay and view the video here and then take the quiz that goes along with it, we can issue certificates from there. So you're more than welcome to do it that way if you'd rather not do it individually. All right.
Mr. Mulcahy?
Thank you, Mr. Chairman. When is the deadline for that again, Lynn?
We'd like, if once you receive that email, we'd like to see you do it within that week. If you do not, they're going to send out another reminder to you. So I definitely want to have it wrapped up pretty much by the middle of June. So
Okay,
shortly after the board meeting.
thank you.
And we are doing well. I mean, several departments have already sent me their certificates, so they're working at it.
Any other questions for Ms. Mackin? All right, thank you.
Thank you.
All right, we will now go to the County Treasurer's Office with the County Treasurer's Report for April 2017, Collector's Report for April 2017, and the monthly resolutions for June 2017. Can I have a motion to combine and approve? Mr. Seroy, second Mr. Washington, and all those in favor say aye. Aye. Opposed, nay. All right, motion carries. Thank you.
Good morning. I guess I'm in the positive position today to say that we're bringing money in downstairs. So first, I have delivered a check to Andy for an early distribution of tax revenue, which I think will go a long way to helping the county through this cash desert, I hope. And we'll see what we can do in June as well. Collection's been going well. The new setup downstairs seems to be working really well. Taxpayers seem to like it. It's convenient. I know we haven't seen the rush yet, but we will. Thank God the banks collect for us. Homestar has collected over $1 million already. Centru is $500,000. People's Municipal. So I think that really, to encourage people to pay their taxes at the banks, takes a lot of the pressure off of the first floor. So we'll continue to encourage people to do that and use the night drop box that Brian put together for us. We haven't seen a lot in it yet, but I'm sure we will toward the end. Number two, last month I talked about hotel taxes not being paid on time. What I did is I sent out a letter to all hotels that this applies to, the ordinance, telling them, reminding them what the ordinance says, providing them a copy of the ordinance, and letting them know that the deadlines would be strictly enforced. And that from now on, if they're late, there will be a penalty and we will bill for it. There was one hotel that's been an ongoing issue over the last 3 or 4 years, according to the records that we have. And I did bill them. I'll now send that on to the state's attorney to collect. So the bill was $2,000, which I think was more than fair based on the amount of lateness. I won't name that hotel in this meeting, but in our office, there was a policy, unwritten policy, but to call that hotel and remind them that their tax needed to be paid. So going forward, that won't happen. We'll expect the tax to be paid on time. And Chairman Wheeler mentioned to me, we have the right, according to ordinance, to audit those statements, occupancy statements and returns with 60 days notice. And I mentioned to Auditor Lee that that might be something we want to do to make sure that the money that's being submitted to the Illinois Department of Revenue matches the percentages that we've been receiving. So that's something we'll undertake going forward. Lastly, I briefly talked about this with Chairman Wheeler. I think that as a body, as a board, we need to maybe look into mobile home taxation. What we're finding right now is the mobile home collection is about $250,000 for the year, of which 10% of that is sale and heirs. So we end up giving $25,000 back. If you look at the disbursement or the distribution that the county gets, it's not enough to cover the money it takes to bring the tax in. So, mobile homes are a special case. they get moved. They're supposed to report when they move. They don't. The mobile home parks don't really want anything to do with it. It's very difficult for the assessors to go out and look at each individual mobile home. It's a nightmare for the amount of money, and there may be some way that we can work together with some board members to craft maybe a legislative tweak to make that more efficient. Because right now it's a losing proposition for the county. I think that's really about it. I would entertain any questions.
Mr. Wheeler?
Thank you, Mr. Chairman. I guess first of all, thank you very much. The hard work on getting the early distribution. I don't know that we've ever gotten it this early before as a body. So this will go a long way to getting our vendors paid because people need to realize that this just covers off $3 million of spent money, that of borrowed money, excuse me, that we haven't. We got to get straight with our debts. So this isn't just money we have to throw around. This is filling the hole that we start creating again throughout the next year. So thank you for that. The other thing is have you done any research on what some of those ordinances might be as far as mobile homes? Have you?
I just started to look at it. Bruce Clark and Eric Blair and myself have been meeting. We've probably had 3 meetings to try to streamline the process. So as we go forward with that, I don't know how you'd want to handle it. I apologize that I don't know. Maybe we could set up some sort of working group to look at it and decide what would be the best way to proceed. We're trying to streamline it downstairs to, mitigate some of the expenses and try to at least recoup what we spend. But for instance, when we send out tax bills for real estate, if you look at sending out tax bills through a mail house for mobile homes, it costs more to mail them than we get. So, there is no way to do that. It's a loser if we send them out in-house. So we will be sending them out in-house. We will be sending them out earlier than we have in the past. Mobile home bills will go out on the 19th, which is the last day the real estate taxes are due. Next year, I'd like to send out mobile home bills according to statute, March 1st. I think it cleans everything up for paperwork downstairs. So, and I'd like to say that I gave the money to the county early to help the county out, but really, Steve McCarty's been calling me every day, telling me he's trying to enjoy his Memorial Day weekend. So that's in fact why I did it.
Any other questions for Mr. Africano? All right, thank you.
Thank you.
All right, we will now go to item number 8, which is the Finance Department. Mr. McCarty.
Good morning. I'd like to introduce Marcy Kohlberg and Carmen Huizinga with our outside audit firm of SKDO to go over the required communications for the fiscal year 2016 comprehensive annual financial report and audit.
Thank you, Steve. What you have in front of you is a big, thick report. It's still marked draft. This is the draft report for the comprehensive annual financial report. It's also known as the CAFR. The CAFR will eventually contain a letter of transmittal from the county's management. It also contains additional individual fund budgetary schedules and statistical sections. There are just a few pages missing from this report yet, which is why it's marked draft. There's a couple statistical schedules that are not yet in there. We are aware of just a couple of typos and errors in there that we still need to fix as well, that we've caught since we made all these copies. So some date changes and the page numbers that you have in your packet don't exactly correspond to the table of contents yet, but we did page numbers for the ease of this presentation. In past years, I think this is the third year they've done a CAFR. Prior to that, it was just annual financial statements, but now they've been doing this full CAFR that contains a lot of that statistical information and other budgetary schedules. That's very informational for the public, and it alleviates the pressure on meeting a lot of requests from the public and from other agencies that they often get. So that's why they do the full CAFR. I'll just walk you through the basic report. Some of you may be new to the committee. What you'll find on page 1 is our opinion on the financial statements. Our job is to look at the financial statements and perform our audit to determine if the financial statements presented to us are materially correct. And we have not issued a qualified opinion, which means it's an unqualified opinion. It's a clean opinion. So the financial statements here are materially correct, is what we're saying. You will notice that we have an emphasis of a matter on page 2 in the report. This is an emphasis of a matter regarding going concern. This is not new. This is the third year now that this is included in the language. Marcy is going to go into a little bit more detail on that when she goes through the highlights of the financial statements. If you move on to page 4 in your report, this is our report on internal control over financial reporting and on compliance and other matters based on our audit performed in accordance with government audit standards. The county is required to have an audit performed in accordance with government auditing standards. So we look at those internal controls, we look at compliance matters, anything that we feel would have a direct and material effect on the financial statements. We take a look at, make sure we have a good understanding of it. We did not find any material non-compliance that had a direct and material effect on these financial statements. And we did not issue any significant deficiencies or material weaknesses in internal controls over the financial reporting. We also perform what's called a single audit, and that is an audit of certain grants. It's a compliance audit at the county level. That audit is complete, but the reports are not complete yet. So we looked at the workforce investment grant and some compliance requirements there. We did not issue any findings for that. Following that, I'll turn it over to Marcy, and she can hit some of the financial statement highlights for you.
Thanks, Carmen. The next section in the report, starting at page 6, is your management discussion and analysis. That is for your reading. That's put together by the finance department with some help from other people. Highlights various things about the report, but I'm going to leave that for your reading. I would like to go to page 22, and I apologize ahead of time. I am going to bounce back and forth between some of these pages, so I will try to give you time to follow along. But on page 22, a few things that I would like to point out. The cash and investment balances as of the end of the year totaled approximately $17 million, which was $2.7 million more than at the end of 15. That's at the top of the page. At the bottom of the page is your net position. That tells you your assets less all of your liabilities, everything that you owe people. If you look at the bottom right-hand corner, it shows that your total net position is $41 million. However, if you go back to the left, the very bottom of the left-hand column, that is your governmental activities, you'll see that your unrestricted net position is a negative $21 million. Unfortunately, that is $2 million more than the unrestricted position last year. Last year, you were negative 19. That means, as you've been hearing and you've been talking and you know, the monies that you have that are not pledged for other special revenues to other places, you have spent some of that money for general operations. So your net unrestricted is a negative $21 million. The next page, on page 23, shows your change in governmental activities. Governmental activities for the county is everything except 911 and animal control. So everything else in the county is part of the governmental activities. This, for those of you that are new, this is a different looking statement. The expenses are on the top left-hand section, shows the expenses by governmental activities, the various activities, general court services, etc. Then in the middle, it shows program revenues. As Jake said, like the auditor's office does not bring in monies, the highway department does, the sheriff's department does, so those types of revenues are in the middle. And it shows off to the right the net expense for those various activities. For example, the net expense of general government is $4.1 million. So the expenses to run the general government, you take the charges off of that, you're still spending 4.1 more than you're bringing in for programs, for charges for services and operating grants. That money is covered by property taxes, sales taxes, all the other taxes that are shown at the bottom. So it's a little bit confusing. It's not a standard income statement that you're going to see if you're looking at businesses. However, if you look under the governmental activities at the bottom, on the bottom left, it shows that you spent $1.9 million more than what you brought in. The business type activities, again, 911 and animal control, brought in $93,000 more than what they spent. So overall, the county spent $1.9 million more than what you brought in. And that is on a full accrual basis there. So taking receivables and payables into account. And pension and depreciation and all of that. The governmental activities had a total of $53.8 million of expenses compared to $55.3 last year. They had offsetting charges for services and grants of $21 million this year compared to $22 million last year, so down a little bit there. The remaining $32.5 right there, kind of in the middle, is what needs to be covered by property taxes, sales taxes, any other general taxes and general monies that you bring in. So, and please remember, this is for the entire county, not just the general fund at this point.
Marcy,
yes.
Marcy, can I
Yes.
add something on this
Yes,
report?
certainly.
For this committee, this brings in highway, this brings in health department, this brings in other activity that we normally only see on a quarterly basis, and pulls a lot of information all on the one page. So just as a point of clarification, that that 1.9, as we have discussed from the main funds of general fund, tort, and pension, this expands out to everything. So that's
Correct.
why it's a little bit different.
Correct. And we'll get to general fund in a minute.
Question to what? Hey,
Oh, thank you, Mr. Chairman. Just a quick question. So that actually makes that number look a little better because highway and health department are in there because they're pretty healthy departments. Okay.
We'd have to look at the, in the back, you could see.
Okay, well, we're
information.
borrowing from highway, so that's why I
Yes.
thought they were
Yes.
much more healthy.
Yes.
And
Yes.
that number's figured in there, so it kind of dilutes.
Right, all of the
Okay.
highway income and expenses are in there, all of the health department income and expenses
Okay.
are in there also.
Thank you very much.
Okay, like I said, there's more detail in the back, we won't go through in detail, but you could look at. Okay, still on page 23, just wanted to point out, public safety, as we know, is the largest expense of the county. They spent $25 million this year, 25.2 last year, so there was a little bit of a decrease. It is 46% of the total expenses. Again, that includes pensions, depreciation of buildings, allocated insurance to them, allocated utilities, all of that. And those numbers you don't necessarily see during the year. They also brought in 4.2 million last year. I'm sorry, 8.2 million. Last year they brought in 8.1. So their expenses went down, their income went up just slightly. So a little bit of an improvement there. Court services is the next largest function. Their total expenses were 8.2 compared to 8.9 last year. So again, decrease in expenses. Their offsetting charges and grants, however, were 4.3 compared to 5.0 million last year. So they had a net expense of 3.9, which was essentially the same as last year. So they pretty much stayed even with last year. This year, the third largest expense category is the general government. They were at 7.5 million compared to 7 million last year, and had 3.4, which is essentially the same last year for offsetting income. So their net expense was 4.1 this year compared to 3.6 last year. A lot of that had to do with pension numbers, which I'll talk about in a few minutes. Transportation did have expenses of 7.1 compared to 7.7 last year. So again, a decrease in expenses. They had 900,000 of charges and grants to offset those expenses compared to 1.1 last year. So a little bit lower from last year. Their net was 6.2 million compared to 6.6 last year. So again, trimming of the net expenses there. Now, if you will flip all the way back to page 79, we're going to go over a little bit of the general fund here. I'll give you a minute to get there. And yeah, you guys are back to back, so if you don't see it, maybe on the back of your page. The general fund, as it's reported in the front of the report, includes the tort fund. On this page, we do separate it out so you can see what's going on in the general fund versus the tort fund. Just wanted to point out that your expenses over your revenues in the general fund towards the very bottom left was a negative $37,000 this year. As Jake had pointed out, the fund did go down, but last year, fiscal year 15, you had lost $622,000. The year before it was 3 million. The year before it was 1.4 million. So you've done a lot to trim those expenses, get down to where you're close to break even in that general fund. This is the 5th year in a row that there is deficit spending, but like we said, it has come down tremendously. There is a graph up front. You don't need to go there, but just if you want to make a note on page 17 that shows where your general fund balances were for the past 10, 12 years in there, so you can see that.
Mr. Wheeler.
Thank you, Mr. Chairman. I just want to remind the committee that we were in a surplus situation until we had to back pay on a labor contract that an arbitrator ruled. So I just want to mention that up until roughly a month ago, we were in a surplus situation. So thank you.
Yes, when we got the numbers for the audit, there was actually a surplus, and then we had that adjustment and a couple other things that were small that brought down to that small negative there.
Could I ask a point to clarify something?
Yes.
So on this page for the statement of activities,
Which page are you on,
I'm
Jason?
sorry, page 79.
Okay.
For the general fund, then the net change in position is negative 37,000.
Correct.
We were just speaking of the net change in position for the entire county at being close to 1.9 million. So the majority of the deficit spending is actually not due to the general fund; it's due to other funds. Is that correct?
No, not necessarily, Jason. It's very hard because the whole GASB 34 thing, which has been around for, I don't even know, 10 years or so, was supposed to make things easier for the reader, and you're going to see it doesn't. This comparison is on a modified accrual.
Okay.
The front pages are on full accrual. So we have to take all of your payables. Modified accrual, you only look at 60 days after year end. Full accrual, you look at everything, including the pension, and I'll go over that in a minute. Your pension liability is huge.
Okay.
That's part of what takes that down.
And that's
okay?
not a cash number.
And that's not a cash number, and it's an estimate. It's an actuarially determined estimate. So that gets rolled into what's up front here. And like I said, we'll go through that in a minute.
Okay.
So, okay.
There's also not a provision for depreciation expense on these fund financial statements in the back. So
But they are in front. Front.
Okay.
So that's another difference, a reconciling item between the two. So the schedule on page 79 that you're looking at is much closer, should be actually exactly what you guys are seeing reported to you as a board on a monthly basis. The ones in the front are more
financial statement. And actually, Jason, for you and others that want, I'm not going to go through it, but on page 26, there is a reconciliation. Now, this again is a total governmental fund, so it's general fund plus all the special revenue funds, but it shows a change in fund balance based on the modified accrual to get to the full accrual and all the various things that took place there. So, and if you've got questions on those, we can cover those at some point with you, but there's so much in these, we could talk to you for 2 days and still have you confused. So, okay, does that explain?
Yeah.
Okay, you're welcome. Back to, I'm going to take you into note 10, which is page 45. I'm sorry, did somebody?
Modified accrual, is that what you were saying?
It starts with the modified accrual number at the top, and then it takes you through the changes, how we get from the modified accrual net income, if you per se, to the negative 1.9. But again, that is all governmental activities.
Thank you.
Okay. As I said, if you go to footnote 10 with me on page 45, that is the IMRF footnote, so a good lead in here. We've been talking with you about this net pension liability for the last 2 or 3 years. Last year was fiscal year 15 was the first year that all of the full accrual net pension liability was brought into the county's records. Prior to that, it was footnoted, but GASB's standards, Governmental Accounting Standards Board said, let's get those into the numbers so people can actually see things. So this footnote is about 10 pages long. I'm not going to go through all of it with you. What I wanted to highlight with you were some rates that the county is paying. And forgive me, I didn't write down where those, I wrote down what the rates were, but not where they are. They're on page 46 there, contributions towards the bottom. You do pay into 3 different plans for IMRF, what's called the regular plan, the ECHO, which is the elected officials plan, and the SHLEP, which is the sheriff and law enforcement personnel plan. The rates that you pay in on those are 12.76 for the regular plan. The elected officials is 458%, and the SHLEP is 30.99%. So for the regular plan, the county paid in $2.4 million for calendar year 15, because the IMRF disclosure is basically based on a calendar year. They paid in $1.2 million for the SHLEP plan and $264,000 for the elected official plan. The net pension liability from this plan that is recorded on the books up front on those front pages is $16.9 million for the regular plan, $4.4 million for the elected officials plan, and $12.6 million for the sheriff's SHLEP plan. The increase over last year in net pension for those 3 plans, the public safety expense was $81,000 higher than last year. The court services expense was $497,000 higher than last year. The general government expense was $300,000 higher, and the transportation expense was $209,000. So those numbers that I'd gone through earlier saying that expenses have gone down, net expenses and that, had this pension expense not been included, everyone would have been in better shape than the prior year by that much more. So that's an accounting adjustment we do at the end of the year. You guys don't see that other than yearly here because it's actually determined each year by IMRF. I think we've got a question, Jason.
Those liability numbers are where? What page?
The actual liability numbers are going to be starting on page 47. And there are the 3 different plans, so it's 47 and 48. There's a table there. The right-hand column is what you would look at. It shows the balance at 12/31. For example, the regular plan, the balance at 12/31 of 14 was 10.3 million. There is a whole grid there that tells what the changes in that liability are, and then the balance of 16.2 million at the end of 15. And each one of the 3 plans is shown there on those 2 pages. Yes, and I'm so in the financial statements themselves on page 22, there is going to be some deferred outflows related to pensions, and a lot of it is in the non-current liabilities. You're not going to see those numbers exactly, but on page 22, starting in the middle of the page, there are deferred outflows and then the liabilities and non-current liabilities. But those numbers do roll up into there. And like I said, that is only the 2nd year that you guys have had to show this. And we 3 years ago had met with this committee and said, you know, this is coming and it's going to make things go south in a hurry because those numbers are large. Now, this year to last year, like I said, you see the changes that we had to record. The largest one was in the regular plan. There was almost a $4 million increase in the liability in the regular plan. The the elected officials plan stayed fairly even, and the sheriff's plan went up about $2.2 million. So, like I said, those numbers are determined by IMRF, hires actuaries to look at numbers specific, and the IMRF plans are specific to the county. You're not dealing with any other governmental unit. These are your liabilities for the employees that are in your plan.
Mr. Scott.
Thank you, Mr. Chairman. So the actuaries, was it year over year, every other year? Will
It's
recalculate
every year.
every year. So
Yes.
these pension liabilities obviously could have a lot of fluctuation.
They can have a lot of
All right.
fluctuation depending on, they look at retiree, you know, they're
Yes.
doing their actuarial study. Not an actuary and don't want to be, but they look at that. They look at, you know, at retirements, ages of the people that are in, contributions made. Now, the other thing that can affect it is if you are not, but if you are in such a position that you would choose to pay extra into IMRF above the required rate, because every year they give you the required employer rate, some governmental units will pay in extra to get that liability down. You guys, unfortunately, are not in that position to
No.
be paying that extra cash. So there's a number of things that can affect that liability. You know, retirees, you know, retirements, deaths, all of that kind of thing will come into play.
And the net pension liability is what we'd owe like today moving forward if everything just stayed the same.
Correct, and it would be based on what they are assuming to be interest rates on investments
Okay.
and that type of thing. So if their interest rates, which I believe was what affected a lot of the plans this year, is the interest rates they had projected were not achieved. So the interest income on those investments is part of this whole determination of the liability.
Right.
Did not achieve those rates that they thought, so they did not receive, you know, that plan, your part of the plan did not receive as much interest as they had hoped from prior years, so they had to adjust things there also.
And I know you guys do similar audits for other municipalities and counties. ECO is a special case because that's something that was in for a very short amount of time.
Correct.
And the eligibility. Obviously, for 16 active members, we still have a $4.4 million liability. Do they have any forecasts on where that particular pension plan is going? I mean, has it been rising drastically every year? Obviously, because of the short window, it was actually active.
Right, that I do not know. We
Okay.
don't do any other counties, so
All right.
we don't have
Okay.
anybody else with that ECHO plan. You can actually go out onto the IMRF website and see a lot of the information that they use for their calculations in that. And there is about a 30-page accounting report that we get from the actuaries, and there's actually some accounts or reports from auditors of the plan and that we get, but there's about a 30-page actuarial report that is available to you.
Okay.
You would have to go to your IMRF website and know your code in that, but the county could get that
Okay.
for you, so you could see some very specific information regarding that if you would like.
Thank you.
Okay.
Can I ask a question?
Yes.
Clarify, let's see if I'm on point now. With the reconciliation then, on page 26,
Mhm.
is it fair to say that 1.9 would be the increase in the liability for that pension?
That would be a lot of the effect, but There is also.
Well, just for the pension alone.
Yes.
That's the change.
Yes,
in
I'm sorry,
liability
yes,
this year.
that is the change,
Okay.
yes.
And then on page
Overall, correct.
23 for statement of activities.
I'm sorry.
I'm sorry.
On page 26, Jason was asking right in the middle, it says change in pension and other post-employment benefit obligations, net reported fund level, 1.9. The other number, though, we did the OPEB health insurance would be part of that too. That OPEB health insurance actuarial study is every other year, and there was a change. There was a study done this year for that, so that would be in that number also, but it was minimal.
Okay.
So.
And then one more question on this, if you don't mind. On the statement of activities on page 23, that expense is allocated amongst the different program or governmental
Correct.
activities, correct?
Correct.
Okay.
Correct. And we show. I don't know if we show. We do not show by. I'm talking to myself here. Yeah, and that's why those numbers that I pointed out, the 81,000 is the additional expense for public safety and all of that. It's not the only expense. That was just the increase in the expense over last year. So, okay. Any other questions on that? If you will turn to page 56 with me. This is the footnote Carmen alluded to earlier, is the going concern footnote, and there is language in our opinion also, but a going concern for a county for governmental unit is a little bit different than a business. A business going concern, if you don't believe that they're going to be in operations within a year of their year end, it's a going concern. With the governmental unit, you have to look at, because governmental units most of the time do not go out of business. I mean, it has happened in other states. In Illinois, you're not allowed to go out of business, for one thing. But in governmental world, we need to look at a few things. Do you have to restructure your debt? Do you need to borrow interfund borrowing? Do you need to cut expenditures such that your operations are going to change? If the treasurer's office, for example, had to cut all of their people and the clerk's office had to take those duties over, that is a significant change in operations. So that's the type of things that we look at with going concern, in addition to where are your cash balances, what's your forecasts, that type of thing. With all of those things, as indicated in note 22, your unrestricted deficit fund balance, or net position, I'm sorry, was a negative $17.8 million for the county, which we already talked about, had a deficit 21 million for general fund, or the governmental activities themselves. So it was a $1.9 million change. It has been a trend. You've been issuing the tax anticipation warrants, issued those again in January of 17. Now those amounts have been coming down each year, which is a good trend if you can continue that. Your bond rating for Moody's did stay the same, and actually your Standard & Poor bond rating did increase slightly because of the things that you've been doing. Your cash balances and the $3 million, your general fund cash balances and the $3 million of tax anticipation warrants that you received in January were only enough to cover 1.37 months of expenditures. So that is why everyone, you're a cash desert. You need that cash as soon as you can get that. The fund balance in the general fund is being projected at a negative amount for the end of the current fiscal year that we're in also. So those are the factors we had to look at. You are looking, the next page on page 57 is the plan for you. What is the county doing? You've gotten additional inmate revenues with the ICE program. You're continuing to cut expenses when you can. You're looking at the short-term borrowings again, which more than likely will come down again this year. So you are working on getting that deficit. As we noted, that deficit was already $600,000 less than it was the year before. So you're working towards that, getting back into a positive yearly position. It's going to take quite a while to dig out of that negative fund balance and the negative overall governmental activities unrestricted balance. So you're moving in the right direction. but there is still concern that you may need to be doing some extreme things to get back to positive. So that is the reason for that going concern. Again, your payables also are still at about 120 days out on some of them. The interfund borrowings, you did pay down between the 2 fiscal years about $300,000 of interfund borrowing. You're still at 6.1 million there. So just a number of indicators that, still a little bit on shaky ground, working towards, improving, but there is some concern there. Any questions on that or anything else that I've talked about? If not, I'm going to let Carmen take over again and give you some status and some other things.
As far as wrapping up the audit process goes, as I mentioned, the single audit report is done. The circuit clerk audit report is also done. We do a separate audit at the circuit clerk on some compliance requirements that the state requires. The health department audit is done separately. That is also complete and in the final stages. And the ETSB board has a separate audit performed as well on their financial statements. That was completed and issued a month, 6 weeks ago. We will have other written communications to the finance committee and then the board as a whole. We're required to give you communications as a result of the audit. Those are still just being finalized and tweaked. So do be expecting that communication to come when everything is processed. Also for department heads and management officials, there is what's called a management representation letter that will be routed. I was hoping to get that out this morning, but it's going to go out this afternoon. So we will be requiring department heads and elected officials to sign off that they've given us the information we've requested, that they've alerted us to anything they're aware of that might affect the audit. And once we get through that process, get those final schedules that I mentioned earlier, we can get the whole final report put together, and the filing date is May 31st. So we are bumping up against that. I think, Andrew?
Yes, thank you. I just want to impress upon everybody that this is, I know there's been some concern with newly elected department heads that they're hesitant to sign off on activities that happened when they weren't in office. This is an absolutely required step that has to be done, and there's been notations made saying while you're not, blessing what happened before you, at least this part of the process was done correctly. And then you may be able to clarify that, but this is not something we can drag our feet in because the I believe this is an SEC thing that we have to have this filing done by the end of the month. So there is no time to delay. This has to be done by everybody. So just want to mention that.
And as Mr. Wheeler pointed out, we do have a cover going with, in the past, we've just sent that representation letter with the draft of the audit. We did put a little cover letter on it for those people that are new to the process, explaining things. And if you have questions, you can please call Carmen and I. But we do need that when you get that to be turned around quickly because, like we said, there is an SEC requirement that this goes out on the 31st, if not before. And with the holiday in there this weekend, it's going to be pushing things a little bit. So
you also have in front of you our management recommendations. So these are items that came to our attention during the audit that did not rise to the level of a reportable finding, but nevertheless are worthy of your consideration. So those are for you to review. If you have any questions on those, please give us a call. You can talk to Mr. Wheeler, you can talk to Mr. McCarty, you can talk to Mr. Lee, Mr. Rowe. I think all of them have had a copy of this prior to this meeting, or you can call us obviously as well. So that's there for your information and your consideration. That's all we had for our formal presentation, unless there's more questions. We do appreciate the opportunity to do the audit, and we appreciate the cooperation of all of the people involved. It does take teamwork to get this out. We're very actively involved in talking with many departments across the last few months, and we do appreciate their cooperation. So, thank you.
Any final questions? Mr. Legess?
I was wondering if we need to go into executive session to discuss some of the things on this letter. At least maybe at the end of the agenda.
Thank you, Mr. Chairman. I did confer with the state's attorney. That is not on the agenda as something we can do. Plus, it wouldn't be apropos as far as the reasons to go into executive session. So if we were to talk about pay rates and things like that, that would be obvious one thing that we could talk about in executive session. But since it is not on the agenda as an executive session item, we can't go into executive session. We can have that conversation in an executive session at the full board if we so choose to do so, and that might be a good idea. But this under checking with the state's attorney, we don't have the purview to do so because we didn't put it on the agenda to start with.
So you're saying at the June 13th meeting we could do it?
We can go into
I
executive
think we need to
session.
put it on the agenda because I think there's some serious things on here.
I would absolutely agree, and there's it's going to be policy things that we look at, not only
Right.
countywide, that we need to address. And I didn't get this report until after the agenda was set out, or
Okay,
else
no.
I would have put it on there. And I apologize for that.
No,
So
I just
checked
want
immediately.
to, I can see there's policy problems and that's why I'd like to address it somewhere.
Yeah, thanks. Mr. Seroy?
Thank you, Mr. Chairman. Mr. Wheeler, I find it hard to believe that if we're in committee and we come across a employee or a payroll situation that we want to discuss in committee, why can't we go into executive session and discuss that without the blessing of the state's attorney or being on the agenda? Because it just came up in committee. So, it's kind of handcuffs our hands here where we got to wait days just to get it on a piece of paper to say we're going to talk about it. That we just found out we needed to talk about it. I mean,
I know.
it's mind blowing that that's the way it operates. So that's just my 2 cents.
Yeah, I would absolutely agree, but I erred on the side of caution and sent that email, and that was the response. So,
Okay.
That's why we have state's attorneys, is to keep us out of trouble.
I agree.
Thanks. Mr. Vicker?
Thank you, Mr. Chairman. My 2 cents is everybody on the board needs to know about it. Thank you.
All right, it will be added to the full board. Okay, thank you. Any final questions then for our external auditors? All right, thank you very much.
Thank you.
Should I move?
Are you gonna talk about it?
Yeah, I got my stuff. Thanks.
You can be wherever then.
There's your group. Jason, I apologize. With everything going on, I completely forgot to send you the packet.
That's okay.
At the time, I was getting in the shower. Jesus.
That's okay.
That's when it hit me.
I probably wouldn't have had time to review it anyway. It's been crazy.
Why don't I just move over?
I think you can start with
All right, good morning. I moved over here so it feels more regular. So. And Diane kicked me out. So. The first group that we'll cover here under the miscellaneous is the regular, the monthly reports for HRA, sales tax, income tax, bed rental, et cetera, use tax that we look at. So these are updated numbers. I don't know if I have anything specific. If somebody has a question, let me know. It's more FYI. These numbers do plug in. We do have some projections, some early projections for FY17. So this detailed information is used, and plugged in our draft look at how 17 is doing here. But before we just fly by it, I don't know if anyone has any questions or not.
Mr. Lear?
So thank you, Mr. Chairman. So based on the monthly average, we're saying the HRA account's a little bit slower than last year.
This is payouts in the HRA fund.
So this is the payouts, and the payouts are a little less.
Yes, at this point.
Thank you. Mr. Wheeler?
Thank you, Mr. Chairman. And it's undetermined what that is at this point. It could be some of the plan choices that were made. We did offer an HMO option. That was a good deal because there was a lot of doctors in the network locally. We did see some migration around in the plan. So we can't peg it as far as, numbers. We can tell if it's running hot or not by the people that are in there. But as far as the numbers of people that are actually in there or not, we can't tell at this point yet. I did speak with Mr. Lynch about that, and we're going to start looking at that as more of a deep dive because the plan itself is running hot too, as far as the line item on health insurance. So we're going to start looking into that. The audit was the first major point that we had to get through.
Mr. Vicker?
Yeah, thank you, Mr. Chairman. I'm seeing a minus 44,000, so the minus sticks out. I mean, what's going on with that, Steve?
That's compared to a year ago for those same months. So the trend is we've paid out 44,000 less in the same 6 months.
I see. Okay.
6 months.
So it's a minus. That's a plus.
Correct.
Yeah,
that's a positive thing.
That's good. I think you can move on.
If there's no other questions with the regular monthly various tax reports, we'll move on to the cash flow analysis. Updated this, well, as of Monday anyway. And then I learned today that Nick distributed more. So we were expecting 2 million, which I do appreciate. So I want to make sure I thank Nick. The amount of calls and emails from our vendors has gone up, but as we talked about, April and May are the most difficult of the cash flow months. You know, they let us know that they want to get paid, and we're doing everything we can to, you know, keep the balance as even as possible. So I plugged in 2 million. So that will help. It will not take care of everything. We will have to keep an eye on the total distribution and making sure that we don't violate the TAW payback, and make sure highway, the payback for that is included, as well as obviously we want to take care of our vendors and stop the calls as fast as we can, but we have to do this systematically, make sure we get everything covered and we stay in compliance with the language of the ordinances and stuff with the TAW. So it's a positive thing. Here's how, you know, how it's been trending. The payables and the receivables. Unfortunately, we have not seen things from the state in the grant and aid area. As we have discussed in the past, it's a couple more months have gone by. So July of 16 is the last on at least the probation side of it. So that the payment of income tax has been kind of sporadic. We're about 2 months out, which we have been, but it's hard to identify when that's going to show up. So when the next one will show up. So that's an update here. Going through, I don't know if there's any specific questions. We'll continue, you know, to update, keep everyone informed. Obviously, it gets a little easier during the summer months just because of the distribution, but we also have to keep planning and keep an eye on it going forward, because unfortunately we can't, with the cash flow in our current situation, we don't ever catch everybody up, and I don't want that to be misunderstood. we get them closer and they're happier, but it's a balancing act throughout the year, but it's much easier in the summer from a cash flow standpoint. So.
Mr. Wheeler.
Thank you, Mr. Chairman. I think that's important. I was going to note that it's somewhat like an accordion. We kind of squeeze it and then we start stretching it back out again, just because of cash flow issues. And I also mentioned, you said, gets better at the last half of the year. Keep in mind what Mr. Lee was talking about. We're going to have less access to cash. We're also going to have a 25% down payment, which will be easily better absorbed on our liability insurance because we're able to address it going forward. It's not in arrears like it was this past year with a 6-month chunk that we had already eaten. So I just want to mention that it will be, and then we'll have less access to capital on our next TAW. So it looks better, but again, we still have the 4.8 million in the deficit. And the main thing is like we said, we're able to keep the banks paid and then keep our vendors closer to being current. So I just don't want any misconceptions that things are much better, because we're still running right on the line. And even a balanced budget is not good enough at this point, because in 2020, we don't have access to any outside capital.
Mr. Vickery.
Just curious, Steve, on April 17th on cash flow, IMRF was 625.
Right.
Just jumped out at me.
Well, that's primarily the 3 payrolls in March. That's when you pay the IMRF for those 3 payrolls next month. For the May estimated, it is a little bit higher than the regular average. There were a couple of retirement items in there as well. Yeah, the last time it jumped, if you look at October of 16 IMRF line, from September, that relates to the 3 payroll lines. Any other questions on cash? And then we'll move to the 17 projections.
Yeah,
All right, the first page for these draft projections. First, I just want to let everybody know and thank the department heads for their cooperation. Been working on this for about between 5 and 6 weeks. We did send out to most spreadsheets and information to ask them to review. They did review. They did get back their best estimate at this point. So this is early trend. It was through March payroll and February claims entry when we started this. Because it takes so long, we will take another look at it probably heading into July in anticipation of our annual discussion with Moody's for our bond rating and see how the trends continue. As well as, so all the departments did take a look and return their information, and was certainly asked as things continue, as new information becomes available, to please continue to let us know. So right now on the summary page, did the 3 major funds and how the 3 major funds are trending: general fund, tort, and pension. And then just combine like what the total is on the general fund. We're using the debt reduction line to show, at what level we're able to get out of the hole in both the summary and also the detail. So there's some advantage at this point. I believe this is a worst case scenario look at it. I believe there's a lot of room for improvement with everybody working together as we move forward. But if we take what's happening right now and project it out and plug in the accruals, as you all heard more than what you wanted to know about accruals, that's plugged in to each of these 3 funds at the fund level of the modified accrual to the best of our knowledge and ability at this point in time of the year. So this is the trend at this point. You also have the detailed revenue worksheet for the general fund, and also the expense worksheet with as things compared to the original budget. So I can, if we want to walk through the revenue, I don't know if you've all spotted things or want to discuss things. The one thing I do want to mention in the total revenue, there could be a question. You look at it like the inmate program; it's running X amount ahead, but the overall doesn't reflect that. Well, there's three major things that are not in 17 that were in 16, and one being the wind farm at 650,000, and then a grant in probation, roughly a couple of grants in different areas. One in probation, about 210,000. So there's 860,000 that will not be in 17 that got counted in 16 because of certain activities. So just understand where it didn't flow, where there's a difference there. So just wanted to bring that to everybody's attention if that didn't look correct, as you were looking at things and where those areas were at. So. There's a lot of information here on the revenues as far as monthly trends. I gave a year to date to show where some trends are higher than even in the past things, and then other trends there are no trend, so we have to go off of previous history and previous trend. So it takes a multiple level to do this. I do close up these spreadsheets. There's percentages all over the place in here, just to try to track, how things are going to the best that we can see at this point. I don't know, if going through, if there's anything specifically that jumps out that you have a question about. Obviously, this is for future reading to take a look at. But the total at this point, about 27.4 million is what we're looking at right now for the revenue piece. So that's significant, higher from 2016 where it was 25.5. So.
Mr. Wheeler?
Thank you. Expenses are significantly higher as well. So, that should be noted. I can tell you that the first line interfund debt reduction if we have and we will have a 3 and 4 year plan on the books here shortly. But the $57,000 towards filling in the debt hole is completely and totally unacceptable. We had budgeted $500,000 on interfund debt reduction, and we also had $500,000 in contingency that no longer exists as well. Now, we have way overestimated, like worst case scenario, overestimated our expenses, I believe, in some areas, and we might have underestimated some revenue. So I do expect this to change substantially. But I continually get the phone calls and the emails and the messages that, we need more money. We need, to change our budget. So when you do your mid-year assessment, and then you amend the budget, we need more. I can tell you that the answer is going to be no as far as I'm concerned. We can't do that because $57,000. I mean, even if we save $500,000 a year, that's a 30-year process of digging ourselves out of the hole. And I don't know about you all, but I'm not in for that. I don't think the county's in for that. So yeah, George will be here for sure. So we have to take a really hard look at what we're doing here and look at reality and figure out how we're going to at least dig into this in bigger chunks. And again, when you have more revenue than your expense, that means the people are paying for services that they're not actually getting. Well, you also think about it in the past, they were getting services that they didn't pay for in the past. So, and I hate to say it like that, but it's absolutely true. We went into this hole for a reason. And so, me and Steve are going to be working on this along with other people to be able to lay this out to you in a 2018 through 2020 budget that includes a cash flow. Because again, we need to know what kind of cash we have to have in 2020 because nobody's given us any at that point. And
What's-
in 2019, we're only getting $1 million, so it's almost, we really need to know for then. Yeah.
Thank you. What is the estimated expense variance line in here?
I use that every year for a variance of the projection of a fluctuation, to plug in.
Is there a difference between that and the contingency line?
Well, I didn't want to be confused as contingency. Contingency is a budget item, and then it gets moved as a budget. So I added the variance just for actual. It's more of an actual, not a budget item, for changes in actual, for unknown things.
Sense. Any other questions on the expense and revenue worksheets? Ms. Peters?
Thank you, Mr. Chairman. Okay, Steve, I'm looking at the cash flow analysis and the property tax distribution. And if you add 2 million and 6.5 million, you get 8.5 million. But when I look at the general fund revenue worksheet and I work myself across to the fiscal year 17 budget or even estimated year end, it's only 4.5. So
Right.
where am
Well-
I missing the other 4 in revenue?
Well, the other special funds, you got tort and pension that are in the cash flow
Okay.
that
Farther down.
get counted. Well,
They're
the
not in-
detail of tort and pension are not
On here.
In here, right at this point.
Okay. This is cash and this is okay.
Right, but you
Got
have.
it.
Yeah,
I was just wondering that.
that's where right, but, and that again that goes through all the distribution. That's all going through that cash account that we part of the end of fund borrowing. So yeah, this pulls apart each fund now.
Mr. Wheeler, you had a
Yes, I think it's probably time to mention what I alluded to earlier. I had a county employee question that I made a statement that roughly 80% of our expenses are related to employees and compensation. Mr. Scott asked that question before, and so ironically, because the state requires it, I had to put together a total compensation report, and we had just got those numbers. So as I pull out all of the general fund people, because we're only talking general fund here, I added it up, and it was actually roughly just the amount of what our total budget is. Now, think about that for a minute, because what we have done is we're pushing pay into the special funds. Okay, so if we're at 100%, though 20% of our pay, the payroll expenses roughly, we have to get more detail, and this is just on the surface, we're paying out of special funds. So as money has become less available to the departments, they're grabbing more out of the special funds. So to say that 80% of our costs, and we're talking about pension and our contribution to FICA and all those health insurance and everything else, it was incorrect to say 80% because it's 100%. So we're pushing that into the special funds, and those are through fees and other things like that are collected. So I thought that might be a dose of reality both for this committee and for the employees that work here, that the major commitment that we have to the city of citizens to provide those services, it takes people, and we need those people and appreciate those people that work here. But to question how much we actually spend on that, and you see what the pension situation is, it's becoming debilitating. So even at bare bones, our costs are on the employee side of things are very high. So I just thought that was appropriate for the committee at this time.
Thank you. Any other questions on the expense revenue worksheets or any of the other miscellaneous reports that Steve provided? Do you have anything else?
Nope, that's all I had for today.
All right. Thanks, Steve. All right, we'll move on to the next agenda item then, which is the update from the Sheriff's Department with Sheriff Downey. That's fine. Yeah. Sheriff, how are you?
Good morning.
Good morning. Good morning. Let's see, a couple things mentioned that have been previously mentioned today that I just want to touch on one of them regarding the federal funds and the seizures. I specifically brought one of the county board members, Jim Byrne, to a training that was put on by Washington, D.C. about how that money can be how that money can be spent, and what we can use it for, what we can't use it for. Can the county borrow it? And obviously they can't. So Mr. Byrne is well aware of that, so we just want to make sure that we're not hoarding that money for ourselves on purpose. But it is there, and we have used some of it for some things that the county didn't have to pay for. So as far as a monthly update, we had a high this past week of 162 ICE detainees. And we've also experienced somewhat of an increase in our U.S. Marshal inmates. Last summer, we were around 75 to 80. For the past 2 months, I believe we've been right around 135. And that number seems to keep going up, which is a big help. I know one day last week, we had 355 out-of-county inmates / detainees in our custody. Those are getting back to that 400 number that we had years back. So those are all positive things that we're looking forward to.
Mr. Lear?
Thank you, Mr. Chairman. I've learned that there's a new sheriff in Kane County, and he has made a policy decision not to accept any federal prisoners. That may explain some of what's happening for us.
Kane or Winnebago?
I thought it was Kane. It might have been Winnebago.
Okay, could be.
It was one of the Illinois counties.
Yeah, I've actually talked to both of them. I've actually talked to both of them. The sheriff from Kane is a guy by the name of Mark Kramer, I believe, and we didn't really talk much about ICE. He didn't say anything about ICE, so I don't know.
Is he new?
No, the guy from Winnebago's new.
Oh, okay.
Joe, and I can't pronounce his last name.
All right.
I have it written down back in my office, but I can't pronounce his last name. Capuano or something. Anyway, he's catching some public flack. And so that has obviously weighed into decisions. Now, I don't know if he decided that they weren't going to house him. I know he was looking for options.
Stated. I'm talking about the federal marshals program.
Oh, that was Kane.
That was Kane.
Yeah, that was Kane.
Federal
That was
marshal.
2 years ago. Yep. And that we actually benefited from that even 2 years ago. But as those numbers continually went down, we were lucky that Kane wasn't housing them because we'd have had even less. So we are beginning now to house those that are classified as medium, high, and high. And what that means is these are more of those charged with criminal offenses that I think has been kind of the controversy of if you're going to hold people for violating our borders, then they should at least be charged with criminal offenses. We are starting to house that type of detainee. We still do have some border violators, but that's who we house is up to ICE, not up to us. So, and we are still staging in Kankakee for the detainees that are being deported. So, and that happens every week. So, questions on ICE?
Zero.
Thank you, Mr. Chairman. Sheriff, thank you for supplying the revenue that this county so desperately needs. Do you have to separate those detainees?
ICE is kept separate. Yes.
No, for the stages of the medium and
yes.
You
yeah.
keep those guys out of.
Yeah, but if in the way that where we house them now, we have 4, and we have basically 8 separate housing pods that we can separate them.
Okay.
So
I just wondered if we're running out of room yet.
Oh no.
All right.
No. I think number 2, vehicle request.
Mr. Jess has a question.
Yeah, Mike, I don't know if you can add anything to this, but I know it's important to us as far as more revenue, but is there anything new on the runway or the airport, or can we
Yeah.
get any help from federal? With,
Well,
with Durbin or-
Representative Parkhurst has really taken that and ran with it, and she has made that one of her priorities to get that done. I'll go into this explanation. It might be a little bit crazy because as I've told you guys before, I've learned more about airports now than I ever thought I would. When these big planes land in an airport, they have to be, according to the FAA rules, 139 certified. What that means is a number of different things that they have to do to meet the FAA guidelines. The Kankakee Valley Airport at this time is not 139 certified. So they are moving towards getting 139 certified. Once that happens, and we were told by ICE flight operations that they'll fly a plane into our airport once we're 139 certified. So both Representative Parkhurst and the airport are both working on those things to get that done. Now, how long that takes, I don't know.
There must be federal money involved too, isn't there?
We're trying. Yeah, we've reached out to some people out in Washington D.C. and we'll see.
Okay. Mr. Wheeler?
Just to augment that a little bit, and it was my understanding in talking with past efforts to access FAA money for our airport that we needed to at least put the TIP plan into that the airport has into our long-range MPO plan. And so we're doing that as the county. We're also taking advantage of the economic development angle of that on warehousing and distribution and things like that. So it's just not an airport for ICE. This is a lever for us to improve the financial condition of the county and job opportunities and
No doubt.
long-range growth
No
out
doubt.
there. That's the goal here. Obviously, it would take care of a short-term cash fix, but who knows where this is going to be down the road. We don't want to depend on this because that we've learned that's not the way to live. So we want to use this as a lever for future growth and development of the airport. So.
Good. Number 2 on the agenda, vehicle request. I mentioned this to the Criminal Justice Committee, and obviously it needed to come here. As most of you are aware, we have purchased 2 new vans that, in spite of whatever delays we had, we are almost close to getting them on the road. Obviously, when they change van styles, obviously the fabrication of the inside of those vans change, and so that takes a little bit longer to get done. We're real close. However, all of our existing vans right now, which I believe there are 6, have between 108 and 140,000 miles on them. The 2 new ones will obviously take out our 2 high mileage vans. However, I think in the interest of the safety of our guys, putting guys on the road with both inmates and detainees, I think it's imperative that we keep our fleet as updated as we possibly can. So I am asking for 2 new vans, that we would start the process. It's not something that's going to happen in the next month, but at least get the process started now so that we can get 2 more high mileage vans off the road. The best part of it is with the fabrication of these 2 vans, now they have that template, so it won't take near as long to fabricate those vans. The cost of the van, which is the state bid price, is $25,800, and obviously that doesn't include the fabrication and the cameras, but the fabrication is around $10,000 a van, and the cameras are, I don't have an exact quote on the cameras, but that would include cameras for both our officers' protection and the inmates and detainees' protection.
Roy.
Thank you, Mr. Chairman. Sheriff can use forfeiture funds for the purchase of your vans?
I don't know. I mean, anything we use forfeiture money for, we email Washington D.C. because I don't want to end up in my own building.
I hear you.
At
least you know where the lights are at.
True. So yeah, we check with DC, but I will.
All right.
Mr. Wheeler?
We did those on lease. Do you remember what we put in as capital development for the two for this year? I can't remember.
I don't.
I'd
I don't
have to
know if
check that
Steve
out.
remembers.
Yeah.
Yeah, I can't remember.
I can't. It's because it was part of a bigger number. You know, a lot of.
I want to
different
say it was like 87,000, and that was everything.
Yeah. And then the other thing to mention is those aren't just for this program. We are at some point going to have to be transporting juveniles to and from Will County on a much more regular basis because I think it's a 24-hour arraignment, or is it 40?
I don't know. Whatever rules Tom makes up is what we're doing. I don't know.
Tom's law. Yeah, but, no, I believe it is. Is it going to be?
Yeah, it's going to be quick. Yeah, it's going to be.
It's going to be. But if you think about it, that's bringing them back and forth on weekends and things like that. So it's going to be pretty quick, and it's probably going to happen. So we're going to be going up there quite a bit.
Yeah, and we still do our own transports as well. I mean, this isn't specifically for ICE. I mean, we're still going to the courthouse. We're still going to the Department of Corrections. We're still going to pick up other inmates who are wanted in other counties that are wanted in Kankakee. So, I mean, it's certainly not specifically for ICE.
Do you think it's possible we order these in Q4 so they show up right as the beginning of the next budget year? I'm just wondering if that's too late.
Well, and actually, based on the information I just got, this order has to be done by June 2nd to get this price. Now, what's going to happen in the next year in the 2018 models? I don't know. I don't think it would be that much different, but I don't know that we can obviously order them by June 2nd. I could order them, but I just wouldn't be with the approval of the county board, which I won't do.
Yeah.
But yeah, that's so we're probably going to wait on that just because. But
okay,
just to give you guys a heads up that is something in the future that we need. So,
Mr. Huss?
Sheriff, is there any chance the body style might change from the 17 to the 18?
They have not changed from 17 to 18. As the first question I asked.
Okay. So the template will be good for both years.
All right, do you need a...
I don't know that we necessarily need anything. I guess I would just bring this back once we know for sure what the exact cost will be, and maybe look at some future date that we can order them, and so it fits in with some cash flow issues if there's ever such a day. But and I'll check on the seizure funds. And then the last issue is more of an informational thing. I brought it up to the Criminal Justice Committee. In criminal cases, and this goes for any arresting agency, any police agency in the county, in most cases, the state's attorney has issued what's called a notice to witness for the police officers. And that means that it's basically just a piece of paper that says, you know, this particular case and case number is going to trial on such and such a date, and you're to be in court on such and such a date. And those basically were either faxed, emailed, whatever, directly to the police departments. For some reason, for some unknown reason, they are now issuing subpoenas, which means those have to be served by us to other police agencies. Obviously, that is a burden on us as far as serving papers. Probably most importantly, because we don't get paid for it. So we just want to keep you guys aware. We're working with Jim Rowe. We're working with the judges to say, please stop issuing subpoenas because they are problematic for us to get served. And they are utilizing our resources that we already don't have to make sure police officers show up in court. The fact that police officers showing up in court should not be an issue. If it is, then that chief or that department head should be the one dealing with it. as opposed to forcing us to do things that we don't technically have the time to do. So just a little info.
Okay.
And that is not a problem for a police officer showing up to court with the sheriff's office. So, and then last thing kind of relating to that, our citations continue to increase, which is a good thing revenue-wise. And our civil process has also seen a slight increase. And remember that we have changed the fees. So we are starting to see some of the increased fees being collected, which is a good thing. And there has not been one person that has questioned why we raised our fees. Because we used to get the question, wow, you guys are cheap. So the law firms and that in Chicago don't even flinch at what we're charging them. So, and of course that's all done by study, by people who know, and so.
All right, any questions then for Sheriff Downey? Thank you.
Thank you.
All right, we'll move on to other business. The first item is the projects for consideration that Brian Gadboy will address.
Good morning. The full expenditure office guys here. So you have here a copy, and it's attached to the yellow sheet on the back side, I believe it is, on the back side of your agenda.
Back side of the agenda. Yeah.
Yes. On the back side of your agenda are some things I jotted down here. Some stuff that's come up in the last, and we've talked about all these things in the last year, but it's time we need to take action. First and foremost are the battery replacements on 3 systems. The chloride system, which backs up master control at Jerome Combs Detention Center. I checked back, it was 5 years ago, it was $10,900 for that battery replacement. That takes care of all of master control. So this is a huge, huge thing that we need to stay up on top of. Those batteries typically have a 5-year lifetime, and they recommend that those batteries are replaced every 5 years. The shear light system in phase 1 and the shear light system in phase 2 keeps all the jail doors locked and all the lights on in between a power failure. This system generally isn't on more than 15 seconds at a time, but it's critical that they're there. I did call this morning. As you see, I have a quote from SEPS for $27,807. I have called another company this morning and spoke with them about a quote as well. I'm hoping to bring this down from there, but tentatively right now, $27,000. I have 5 systems in the county that require battery replacement. The next sets, there's 2 sets that'll need to be replaced in 2019, and the third set's in 2021. So this will get us through a couple of years. I asked in the budget process to have this considered, and I was given the same amount of money as I was in last year. So there was never anything pressed for that. The swipe card system was approved by this committee, $22,853. Here's where we are with that. We've worked through this whole system with the Chief of Corrections and with Trent Bukowski in the IT department out there. This will turn the swipe card system over into one system for the entire county, and this was already approved. The Johnson Control heating and cooling upgrades. Here's what happened. About 8 months ago, that our hard drive crashed. I called Johnson Control out. They're the priority company for that system. It controls all the heating and cooling at the Jerome Combs Detention Center. We were able to bring that hard drive up, and thank goodness for Josh out there with the IT department. He was able to get that system brought back up and downloaded onto another hard drive. So we're working on its last leg. This system's been in place for 10 years. It's never been upgraded. There's 10 upgrades to this system since it was installed in 2007. So we're 10 upgrades behind on this. This has to get done. If we lose that hard drive again, we're done. We have no control over that system at all. So this one here, I'm moving to the top of the priority list along with the battery replacements. Inmate kitchen tile and grout. When ICE came into the jail, we had to do several things in that kitchen to bring it to compliance with ICE. One of those things was the grout in the floor. What happens with grout in the floor is the acid in the food that's on the floor eats the grout out between the tile. Now, it's quarry tile. There's nothing wrong with the quarry tile, but there's a huge section inside that inmate kitchen that there is no grout whatsoever. We're down to bare concrete here. I brought Tile by Lonnie out. They gave us a price somewhere between $8,500 and $10,000. They've asked if we can do this ourselves. I actually don't have anybody qualified to do it, although they say it's as simple as could be. All that has to be completely acid bathed, dried, and the grout reinstalled in there. And the health department will be calling us out on this if we don't address this issue. It needs to get done, and we need to get this done.
Mr. Washington.
Is there a special kind of grout that you can put in that isn't going to be eaten out by the acid?
No. I asked that same question. They've just replaced the grout at the Veterans Center out in Manteno, same way at Riverside Hospital. No, they put that grout in there. It's a special kitchen grout, but it does deteriorate because of the acid in the food. It's the food product is what eats it away. It's my understanding of this. I don't know. They said they just did all of the Veterans Center out at Manteno had a huge problem with it. And it's the same deal out there. It's quarry tile. So the phase 2 overhead door we're working on right now with the sheriff. I have that down as NA, not added to my list here. That's something we're going to try and work through. The Kone elevator at the Kankakee County Developmental Center, or I'm sorry, Kankakee County Detention Center. The valve on that elevator is the original valve. What's happening is we put inmates or food on that elevator as it starts to proceed down. It moves past the stop. The valve's not able to stop the elevator. As it turns out, the elevator stops and we can't get it going again. Have to call Kone out for a service. They come in, get it going again. They've recommended a valve replacement of $16,080. I've put this off for about 4 months now. We've asked them to not overload the elevator. We're making some, but in the event that this fails, all the food in that building will have to be carried for 3 meals a day up the 3 flights of stairs. So this is something that needs to get done. It's never been done. There are 2 elevators there. One's a passenger elevator on the outside of the jail itself, and it had been replaced at some time. I don't have any dates on that. The parking lot on the north side of that building, Mark Rogers went out, got estimates for us, and it was presented at the Buildings and Grounds meeting at $80,137. If you drive over and take a look at that parking lot, it's crumbling apart. And we're talking about big chunks of asphalt. We asked if we could cold patch that. I don't know that it'll attach to anything anymore. It's just crumbling apart. So that's something that's going to have to be talked about.
Mr. Wheeler?
Thank you. Thanks, Brian. That is the lot where we would have to be putting the 8 ADA spaces also. Is that correct?
Yes.
Yeah, I think the committee needs to understand that as well. We're working on a solution with the Attorney General's office, and that is the lot that's acceptable to them to put all of our ADA handicap spaces in. So
Yes.
these two things are tied together. Now, whether we have the 80 grand or not is another question, but I just wanted everybody to understand that this is just not to fix a lot that's marginally used. There's a real reason to do it. Okay.
With the relocation of the state's attorney's office going back to the courthouse, we upgraded the phone system on that 3rd floor. They're currently operational there. We've since yesterday completed the move to the county building with the state's attorney up on 6. These phone systems are not tied together. They are, but they can't speak to each other just yet. We need to tie those phone systems together, and with the help of Kevin Duvall, we'll have to have some meetings and get some things straightened out here. We want to tie and umbrella these 3 buildings together. There's a lot to this with the IT department, and hopefully we'll work through this, but for example, if a call goes to the state's attorney's office to the third floor and they want to talk to somebody in the civil division, they have to give them a phone number to call. There's no way to transfer these calls between the three buildings, 189 Courthouse and Annex Building. We want to put those three buildings under one umbrella. And in order to get that done, it's going to take about $8,100 for all of that to happen. It's something that should get done. It would bring us right up to grade where we are, where we need to be in our updates. So something to consider. A 3-compartment sink has been requested for the inmate kitchen at Jerome Combs. The Chief of Corrections has given me these numbers, somewhere between $800 and $1,300 for the sink, and then whatever the costs are to install. I haven't even checked on that yet. These are basic numbers, but this is something that also needs to happen. 3 sinks are required for doing pots and pans. It's a 3-level deal that has to happen through the ICE program. So this is something else we ask you to consider. Courthouse. The courthouse for Reuter with all the court phones. All the phones are updated in that courthouse. The circuit clerk, the state's attorney, but the court's phones are still on analog phones. Those phones cost us roughly, and Steve, correct me if I'm wrong here, about $30 a month per line for $13,957. That includes all the phones, which each department buys themselves. So that cost would be driven down by the courts taking over their portion of the phone purchase. I have that quote, but it's roughly $13,000. So that's something that also needs to happen. I did talk to Judge Kramer briefly about it, but he really didn't have any input on it as of yet till I talked to you guys. So I guess where I am here is the swipe card system is approved. I'm going to need to upgrade these batteries. This is something that has to get done. We cannot let these systems fail. If they fail, we lose lights, we lose locks, we lose master control. This has to get done. The Jerome Combs Johnson Control heating and cooling upgrades needs to happen. We can't put this off any longer. The other problem with this was we never ever signed a service agreement with Johnson Controls, and I don't know why that didn't happen, and I can't answer why. But this is something that needs to get done. Roughly, a service agreement in my department, a service agreement roughly runs between $3,000 and $4,000 a year. So if you take that times 10 years, they're real close at where these upgrades should have been. So I'm bringing this to you and asking for some money, roughly $105,000 in upgrades that need to happen in these buildings.
Thanks, Mr. Chairman. Things are dire, and I get it. And you know, the replace the valve, is this replace the valve versus the entire unit? We are going to continue to use downtown, so that only makes sense to look at it going forward. Question is where does the money come from? And I can tell you that and for this committee's knowledge, I had called in the revolving, I mentioned before, the revolving loan fund is basically defunct now. The state no longer sends us any money for economic development, if you will. They don't send us any money for anything, frankly. But beyond that, so I called in one of the loans. We got a check or a wire transfer, I believe, for around $75,000 from one of the people that was in that fund. So as chairman, I would recommend that maybe we use some of that to cover off some of these immediate needs. Because I do see them as immediate needs. You can't have the jail, the doors all open. You can't. You just can't. And the grout, that's an issue that's not going to go away. Now, the only thing I will say that the parking lot, while we want to address it, that's part of something that we're working on negotiations on right now that I would recommend that we put that off. I'm working on accessing some other capital from another source that I'll address here in a moment when we talk about the Ice Miller engagement letter. So that would be my recommendation to the committee is if you, while I think that most people agree with this, we might want to set that $80,000 aside for a near future we'll address that in the near future once we get better feedback from the Attorney General and things like that.
Okay.
Does that make sense, Brian?
Yes. Yes, sir.
And I don't know how everybody feels about that, but
Any other comments or questions on this? Mr. Ritter?
Do you have 3 quotes on all this stuff? Have you got a lot of quotes? I mean, these numbers could go down if we get more quotes, right?
Yes. The Johnson Control Heating and Cooling System is priority.
That's proprietary, right?
Yes,
Yeah,
they own it. So
I understand that.
The other option is to go out, get another company to come in and replace all that equipment, that Johnson Controls typically will change out as well. But because it is priority, I'm kind of stuck there with them. Again, the swipe card system was approved, and the battery replacement. Like I say, I'm quoting the battery replacement. I made some calls this morning on that, so I'm hoping to drive that number down. We'll drive that number down some more.
Mr. Wheeler?
thank you. I forgot about something. Tie the phones all together at the 3 locations. Mr. Duval mentioned an executive yesterday that he may have a solution for you. Did you guys talk?
No, we haven't spoke about that.
Did you want to explain any part about that, Kevin, on the mic real quick? So the committee knows this may go away or be severely reduced based on if his idea pans out.
Okay.
He just has to confer with you.
Okay, no, that's fine.
I sent you an email. You can shoot that by router so they can see. There's 2 options to have. Right now, they are connected together. My conversation was, we won't change any of the data network for any reason to allow a phone system to go. They should never be on the data network. But if they can make use of the existing settings, try it, because they are all linked together.
Okay.
But if that doesn't work, my solution potentially was, I got to wait for the answer to come back from. We were utilizing the fiber, the city's joint venture, the city of Kankakee's joint venture with the Daily Journal. We actually have fiber that was connecting the state's attorney's old location back to the court campus. That's how they didn't have any servers or internet. They were getting back to there. What I'm requesting, since we are already under contract for that, is to switch that to over here, since we have a fiber line here from the same system. Can we hit that? Can we light another fiber line? Since it was already in the budget, it's not a budget increase. We're just switching from that location to that location. And then this part you guys won't care about, we'd switch everybody on the phone systems to the exact same one. And then they could do whatever they want to. They wouldn't be touching ours. So both of them should cost theoretically nothing. The first one to try is see if it works now. The second one is, if that's not working, let's see if we can do the second one. But that we're going to be relying on the Fabulous Fiber saying that's okay to switch locations from here to here.
Okay.
But I did send you an email. Shoot that by your contact and see if he understands that.
Very good. Well, we'll talk some more. You and I will get together here and talk some more. I've been kind of busy these last few days.
Should we bring the rest of these to the full board then for their consideration?
Finance to say move forward. I believe that's the way we've tackled it before. Okay. And it's more of a head nod, move forward on this, and this. Well, we can if we want to, but.
Mr. Legess?
Is that what we're going to do? We're going to prioritize which ones have to be done?
Well, again, I'm asking battery replacement for sure. The Johnson Control upgrade. The swipe cards were approved 2 months ago, so that was already taken care of. The inmate kitchen tile grout and
The Coney elevator?
the elevator.
Well, if you take out the parking lot as well as the swipe system card, which was already approved, we'd probably be in that close to that range of the 75 to 80
roughly
that you were mentioning, Andy. So
Yes.
we could just say,
Well, wasn't there something added at the bottom with the 13,950?
Well, that most of that cost is going to be on the courts though, because they're going to.
Well, that's what was going to be my question. Is it coming out of a fund, an automated fund or automation fund or some fund? But they take care of that.
Well, they purchased their own phones. I have to go look at the breakdown of how this came out. The total
Okay.
cost of it was 13 grand. So I can't answer that right now because I don't have the quote with me. But
I'm
again,
not trying to bring up bad situations, but I go back to this letter that the auditor gave us, and if you look at the fourth item on here, it's half of what the cost of what we're looking at now.
Yeah.
And to me, I mean, isn't that theft, for crying out loud? If you knowingly did that, knowing that that wasn't, we can't.
Well, I remember we
talk
talked about that. That was brought up another time. We
I know,
discussed
but
that.
don't
didn't
it drive you nuts?
Yeah, it's frustrating.
I mean, that's like throwing money away. Gee, man, crap. You got your money to throw away.
Okay, never
Mr. Vickery?
Yeah, thank you, Mr. Chairman. Just to move forward on it. So I'll make a motion that we approve the battery replacement systems, the Johnson Control heating and cooling upgrades, the inmate kitchen tile grout, the Phase 2 overhead door.
No, Phase 2 overhead door. We don't need to do nothing with that.
Okay.
We'll keep that one in the background there.
And the Coney elevator, do we want to do the valve or the entire unit?
We don't need to replace that entire unit.
Okay.
I'm convinced we can get by with the valve. But we'll be fine with the valve.
Okay, so the Coney elevator at the correction center, the valve at 16,000. And tie the phones together. We don't know the cost, but whatever that cost is, we'll approve it.
Well, I'd like to come.
It may cost nothing.
Yes,
Okay.
I'd like to come back with you because we're going to meet.
Okay.
We'll meet with those guys.
And then the 3-compartment sink.
Yes, sir.
Okay.
Yes, sir. That's big too.
We have a motion, Mr. Washington, second. Any further discussion on these items? All right. Better do a roll call vote.
Mr. Johnson?
Aye.
Mr. Legess? Mr. Washington? Mr. Vickery? Mr. Hess? Mr. Mulcahy? Mr. Scott? Mr. Seroy? Mr. Hildebrand? Ms. Weber? Mr. Payton? Mr. Ritter? Mr. Wheeler? Motion carries.
Now, do we have other business for Mr. Duvall to present? That's connected. Okay, thank you. All right, we'll move on to the old business then, which I believe Andy will speak on.
I'll run through these as quick as I can. I know this has been a marathon. The NIMEC update, those are the people that handle our electric aggregation. The bid will go out on the 19th. That's when it may go to the 20th, but it's as it stands right now, the 19th. I did get some rates, and it looks like it will be advantageous for the small towns in the area to partner with us to get a lower rate than ComEd is going to be offering. So we'll nail that down on that date. So that was some good news I got the other day I want to fill you in on. The public defender holiday weekend court issue is something I was alerted to by the chief judge. Those on criminal justice may have recognized that we may have the need to be holding court out at the jail on the weekends based on some of the new mandates that are coming down from Springfield. They don't want to be holding people for minor offenses in jail because they can't meet bail. And so the Illinois legislature is looking at making it so you have to release them, whether it's with ankle bracelets or whatever, that's to be determined, but you can't hold them because they can't meet bail is what is coming down. It will force an increase in expense onto Tom's staff, but it will also force an increase in expense on the public defender. So that's going to be coming back here. They think the increase may be about $500 a month. Yeah, it's like that. I think it's 48 hours. So it would be holidays and weekends. And if they're together, that's obviously problematic. So we want to make sure that this committee knows that it may come back as far as a budget amendment that we're going to be asking for that amendment on the public defender side of things. And it will manifest with Tom as well, because it is going to happen. So it's better to start getting that going now. And the judges have to know that probation is going to monitor people as well while they're out on bail. So I'll skip over the Eric real quick here and go right to, and then we'll come back to that. Ice Miller engagement letter that's in your packets. Basically, Ice Miller's our bond counsel, and we are engaging them because the bond is now paid off at the Will County Detention Center, and we're left with another 10 years on a lease agreement that really has no financials tied to it. So we're in negotiations with Will County on what we're going to do up there going forward. Made a visit up there, took a tour with with Vice Chairman and Tom Latham went up with us. It's a facility that will be needed going forward, but the financial arrangements aren't there. We still have roughly $500,000 left in a maintenance fund up there. They did take, for the last bond payment, they did take out our portion of that bond payment. So we will be bringing back an ordinance next month for the committee to say, well, that we authorize that payment. So we need to clean up that mess, much like we did when we did access the 1.2 million before that we took out of that fund, that we ended up with, I think, 600,000 left with. So just want to let you know that that's coming, and that's why we have to engage those folks. And so I was looking for approval to go ahead and engage our bond counsel to work through that, and also to negotiate with us, the PBC, which may or may not be part of this next arrangement in Will County and Will County. So I just need a motion to allow me to, those are the charges, and if anybody has any questions, I'll try to answer the best I can.
Motion Vickery, second Mr. Legess. Any questions on this? All those in favor say aye. Aye. Opposed, nay.
It's got to be a roll call. We're spending
Roll
money.
call?
Sorry.
All right. Sorry, roll call.
Oop. I love
Mr.
paying
Johnson.
Aye.
Mr. Legess. Mr. Washington.
Aye.
Mr. Vickery. Mr. Mulcahy. Mr. Seroy. Mr. Hildebrand. Ms. Weber. Mr. Payton. Mr. Ritter. Mr. Whaler. Motion carries.
Just on one quick note before we talk with about the folder inserter, it was not on the agenda. It's just more an information thing. I don't mean to embarrass her with this, but Nicole McCarty is going to be leaving us, and a lot of people know about this. Yes, she's going to be the finance director at Bradley Elementary, and so congratulations to her. Because I told her you're dead to me now. No, I'm just kidding. We all wish her well. She did a great job, and accordingly, there'll be a job posting going up. So we're working on that job description now. So I didn't want this committee to think, that we weren't coming through the committee, but we are hiring a replacement, and we're looking at some different options there. So, so moving on to the folder inserter, Eric had performed a cost analysis based on, and then Brian had some information on what that folder inserter was actually costing us, because that has come up, because really we only use it for one department now, potentially at the end of the year. So it's in your packet. Let me find that real quick before we, oh, here it is. And I don't know if Eric has any comment, but I'll try to run through this as best I can. In short, the best bid that we have, the total cost is roughly, just for the 28,000 volume, $13,706. And when you look at the cost of just the folder inserter portion of the mailing package, if you will, of what we have, because we still need the mailer. We use that all the time. So, and it's roughly $8,000 a year for just the folder inserter part of that, just under 8,000. And then we calculated what the labor was to run that machine. It's around 7,000. So people were looking for the cost analysis. I would recommend that we authorize as a committee that we can look to get out of that agreement at the quickest possible time and outsource these, because we just don't have the labor to do this, and the costs. We're not going to get, obviously the auditor's office is not going to be helping fold and stuff envelopes, and it will fall completely to the assessor, and I don't think he has the manpower either down there to do it. So I think the committee would agree that it's probably the best thing. Even if we saved 5 cents, it would cost us more in labor, and what the public is not able to get the services they need because someone's stuffing envelopes or packets for the better part of 2.5, 3 weeks. So.
Any comments on that?
Yeah. I need to add one thing here. I spoke with the young man from Neopost about this, our representative for our area. They'd like to set up a meeting to come here and negotiate a new contract. I don't know who you'd like to recommend for this. I'd certainly like to have Mr. Lee involved in this, since they do take care of the money side of this, money being put onto the mail machine. And what we need to do is get current on our current contract that we're under. We're actually behind, and they would like to have the next quarter paid in full in order to rewrite a contract for the county. So that's what he's requested. But again, I'd like to call and set up a meeting date with him and get a list from you who you'd like to have help negotiate this thing out.
Sounds good.
Mr. Mulcahy?
Thank you, Mr. Chairman. Ryan, by rewriting a contract, you mean getting out of the contract?
Yes.
Okay. They're not under the impression that we want to move forward with them.
No,
Okay.
they want us to void the current contract with the folder inserter added, avoid it, rewrite a new contract on a 3-year deal for just the mail.
Just the mailing machine. Okay, thank you.
And we can meet with him. He's a good young man. He's a very nice young man.
Okay. Any other comments on this? I think you have our. Do we need a motion? Okay.
Money.
Sure. Motion to Mr. Washington, second Mr. Payton. All those in favor say aye. No, roll call. All right, roll call.
The only thing I have is I'm sorry.
Here's a roll call. Mr. Johnson.
Aye.
Mr. Lejes. Mr. Washington. Mr. Vickery. Mr. Mulcahy. Mr. Seroy. Mr. Hildebrand. Ms. Weber. Mr. Payton. Mr. Ritter. Mr. Wheeler. Motion carries.
Last month, we went out to bid on the vending contract for the county. And the reason we did that was Board Machine was bought out by Alternative Vending Concepts. We went out to bid at the Buildings and Grounds meeting. I received 2 bids we opened. One was from CL Vending. The other one was Alternative Vending. Really, the only thing that separated the two was the payback to the county. CL Vending said they would give back 10% of their profits. Alternative Vending Concepts said they would give back 20%. So Alternative Vending Contracts is the acceptable bid. I just need to get this approved and we can move forward with getting the paperwork taken care of through civil.
Mr. Lejes for the first, Mr. McKay second. Voice vote. All right. All those in favor say aye. Opposed, nay. Motion carries.
That's
yeah.
right.
Just wanted to clarify. I made a mistake the last time. Mr. Lejes.
Would they be called alternative snacks?
Don't answer that.
I'm sorry for you.
All right. Any other business to be brought before the board? If there is none, would someone like to make a motion to adjourn? Mr. Lejes, second Mr. Mulcahy. All those in favor say aye. Opposed, nay. Motion carries.